Welcome back to the channel, everyone. Hope you're doing absolutely fine. In our previous video, we discussed about mutual funds. What is a mutual fund? What are the different types of mutual funds? Equity fund, debt fund, hybrid fund. We also discussed about how mutual fund is a good way of investing your money, even though there is definitely a certain level of risk involved. And how you can take that calculative risk to ensure that you are getting better returns. At the same time, you're not making losses. So in today's video, we are going to discuss a special type of mutual fund which is very important for people like us. People who make money and want to save some amount of taxes. So it's a very important mutual fund type. It's nothing but an ELSS, that is Equity Linked Savings Scheme. So in today's video, we are going to understand what is an ELSS and how can you use your ELSS to save a lot of money. At the same time, you can also use it to earn a higher interest rate. So stay tuned till the end. But before that, you know the regular drill. Please subscribe to the channel, hit that bell icon to stay updated. Let us know in comment section below, when was your mutual fund investment into ELSS for the first time? As I always say, let's get started. Welcome back, guys. So let's make this video simpler by having few questions and directly answer them. So what is ELSS, or Equity Linked Savings Scheme? As the name suggests, it is an investment type, or it is a mutual fund type where most of the investments, all the investments, is basically put into the equity or the stock market. Now mind you, this is the only investment type which is, to say, it is the only mutual fund investment type which comes under ATC. That means by investing in this particular mutual fund type, you can definitely save a good amount of your taxes. Now, how do you do it? What are the terms and conditions? We are going to understand in the next questions. Second question, what is the lock-in period? 3 years. Now, I'm not sure how many of you are currently paying taxes or how many of you really are involved in this process. So if you actually compare ELSS with any other investment type that comes under ATC, whether it be the voluntary provident fund, whether it be your PF as such, whether it be your life insurance corporation, the premium that you pay, right? Or whether it be any other, let's say a postal deposit or a fixed term deposit, right? So all these deposits or all these investment types basically have a higher lock-in period. Some have 5 years, some have 15 years, and there are few like the PF where you can only withdraw the entire amount post your retirement. So it's a long way to go. And our generation is such that we need funds, right? We need funds for using it in our regular day-to-day expenses. We need it for buying goods. We need it for investing in something else, or maybe get higher returns. So since we need all these things, so ELSS becomes a perfect product for all of us, especially the people of our generation, because it has a lock-in period of 3 years, and in the span of 3 years, the chances of marketing getting overturned is very less. So hence, there is a high probability that if you are investing in a good mutual fund, there is a certainty, definitely, that by the time the 3-year period gets over, you're going to get a good return. Now, many people ask, what is the average interest rate? Now, in 2021, I would say the average interest rate for an ELSS is somewhere around 16 to 21%. Now, you must be amazed that if this is such a wonderful product, why don't people invest in it? Because the mutual fund rate is higher, and like it is much better than any other product in the market, because other products have uh, a higher period, higher lock-in period, but a lower rate. Then why do people don't invest in this? Now, as I said when I started video, and even in my previous videos, that mutual funds are nothing but investment into the market, especially the equity mutual funds, which is, of course, the ELSS is also an equity mutual fund. So there, what happens is, when you invest in the equity or the stock market, so basically what you're doing is you are basically trusting the companies who are basically holding a share of that particular mutual fund. Now what happens is, when you're trusting a company, there are two possibilities. One is, the performance of the company might come down or it might go up. If it goes up, good for you. If it comes down, you're at loss. So people who are reluctant to take that slightest of risk, they should definitely not invest in ELSS. Now let's discuss about some advantages of a ELSS. Right? Is it much better than all the other investments that come under ATC? If you ask me, definitely yes. Now, what are the advantages? Now, number one is lesser lock-in period, so you don't actually stay away from your money for too long. So you can get back your money and invest it somewhere else or use it for something else. That is a good thing. Number two, you're getting a higher rate of return. So in other deposits, if you see a fixed term deposit, it gives you around 6.25 to 6.5 percentage rate. But when it comes to a mutual fund, you're getting almost 3 times more. So it's almost 17 to 21%. That is the average return if you're investing in a good mutual fund. So definitely the rate is pretty higher. Next thing which I feel is, nowadays, there are brilliant platforms and different platforms which give you the opportunity to easily apply and invest in a mutual fund, and that is something I feel makes you track your mutual funds on a daily basis at your fingertips. And you should definitely consider it as an advantage, because this is something which we need. Right, we need to control all our investments at the tip of our fingers, and that's what these mutual funds are, and that what these platforms offer. So it's a good advantage. Now the fourth advantage, which many people feel it's a con, is that the price of a mutual fund actually fluctuates based upon the market performance. Now many people might feel that it's a con, because there are always chances that the market might come down. But what I feel is, as I have always already explained you in my previous video, which you can definitely look into, that mutual funds are a place where the fund is diversified across different companies, and it's a rare scenario that all the companies stop performing at the same time. So there are always a higher chance that if you're investing in a mutual fund where there are good companies, where the performance since past few years has been good, the companies are progressing, they are moving ahead, then definitely your money is in safe hands, and at the end of 3 years you are going to get a higher rate of interest as compared to any other deposit in the market. So that's a big advantage, I would say. So these are the four advantages. Now, if you ask me disadvantages, I would say certainly there are no disadvantages when it comes to, but yes, make sure you remember that mutual funds are subject to market risk. Okay, so I love this question. So, who should invest? Now, there are a few assumptions which people have. Basically, I would say these are misconceptions which people have. They feel that someone who has proper knowledge of the market and who understands or analyzes the movement of funds, he's the one who should invest in ELSS. Then there are people who feel that if you want to invest in ELSS, you have to give your, you have to track your mutual funds every time, right, on the entire day, right? You have to track it on a daily basis. So that is something you need to do. The third thing which I feel is, people feel that only those who are ready to take risk with their money, with their hard-earned money, they are the ones who invest in ELSS. But let me tell you one very simple fact, that for investing nowadays, the kind of digital platforms we have, where we can see the past year's data, and even in fact last 5 years data, or the lifetime data of a particular fund, it becomes really easy for you to predict how the market is going to be, and whether the market is going to be stable in the next upcoming 3 years or not, because it's just 3 years that you need to predict, because that is when your lock-in period ends and you can take out your money. Now there is a question which people ask often, that do you need to withdraw money after the period of 3 years? And the answer is, it's not mandatory. You can there are two options basically, right? So one is that you might withdraw the funds, use it for something else, but there is a second option, that is you can switch the funds. So basically you are switching the funds from a ELSS to a direct fund. So when you are investing into a direct fund, that is when the risk increases, at the same time the interest rate also increases. So though these are those funds that I was talking to you in my previous video, that you can invest and take out at any time, even on the next working day, the day the funds get allocated to you, the very next day you can units get allocated to you, so the very next day you can withdraw those funds. So that is also a very I would say big uh, benefit. At the same time, these funds are a bit higher risk as compared to the normal ELSS funds. Now a last question which people have confusion, that after 3 years when we get these returns, is it taxable? Are those returns taxable? And it's a very simple fact. So government of India has given us a privilege, or given us the opportunity to actually have the tax exemption till 1 lakh of interest. So basically these interest that you're getting out of a long-term mutual fund or a 3 years mutual fund is categorized under long-term capital gain. So long-term capital gain, if you're earning, so you can be tax exempt up to 1 lakh. So if your interest earning is more than 1 lakh, that is when your interest, I mean, you are being charged. So that may vary from 15 to 20%. Right now it's 20%. So if your interest earning is more than a lakh within the span of 3 years, I mean, when you're liquidating your assets, if it's more than 1 lakh, definitely you have to pay a tax on the amount that is above 1 lakh. So be mindful of that. I hope in this video you understood about what is ELSS and how can you use it to make your life easier. So under ETC, you can save up to 1.5 lakhs, in which there is a major component or a minor component that is contributed by your PF, and the rest component you have for investing into fixed deposits, to invest into LIC premiums, into mutual funds, that is ELSS. And my suggestion would be, please start investing into ELSS, and the best platform or the best app, I would say, where you can securely do a transaction and track it real time every day is GROWW. So do check out the video, do check out the link in the description, so to actually have a better understanding of how GROWW works. This is the GROWW platform, and as you can see, we are now hovering around the tax saving mutual funds. So these are the different mutual funds that are currently in the list. So as I was saying, if you see the 3-year data, right, which is the usual lock-in period data, you'll see that the interest rate is ranging from 22%, 19%, 17%, 15%, 14%. Now if you see this side, there are different ratings that have been given to these funds, so 3-star, 4-star, 5-star, based on what is the risk level of these funds. Now if we, let's say, check this particular fund, so this is Mira Asset Tax Saver Fund, Direct Growth Fund, okay, for which the 1-year return has been almost 67.74%, which is a big return, I would say. So as you see here, it says 3 years lock-in period, it says ELSS. So the moment you start invest some money in it, that amount stays in this mutual fund for a period of 3 years. Now if there is a question which people often ask, that how is it different, how is one-time investment different from an SIP? Now SIP is systemic investment plan, right? So where you are basically investing every month. And in case of ELSS, what happens is, if you're investing at once, right, if you are investing at once, so let's say you invested today, so from today plus 3 years is going to be a lock-in period, and after that you're going to get back your money. But if you are investing it in the form of an SIP, right, so what happens is, let's say I make an SIP of 10,000, so every month 10,000 rupees gets debited from my account and gets invested into the mutual fund. So what happens is, suppose this is the month of July, so I'm investing in this month, so from this month plus 3 years will be the lock-in for this 10,000. Then next month, when again on the same date 10,000 gets invested, so from that date plus 3 years will be the lock-in for that particular amount, that 10,000. Accordingly, it will go on till 3 years, right? So till the 36th month the amount will get debited, and you can imagine plus 3 years you have to do to get all of your amount. You will be getting all your amount only after close to, I would say, 3 years will be your investment time, and plus 3 years will be your time when you will be getting your final fund. But yes, you don't have that restriction that yes, you have to wait for 6 years to for your fund to withdraw. You can withdraw it even after 3 years, because as I said that, let's say you're investing today, so plus 3 years is your lock in for this 10,000. So you can withdraw this 10,000 plus interest at the end of those 3 years. So that is certainly a option that you get. But in case of taxable mutual funds, my recommendation is always try to do it one time, because it helps. And secondly, when you do it one time, you can analyze the market better, you know where the price has fallen, and that is when it's the best time to invest, because you get more units allocated. Okay, now if you come down, you'll see there are so many details out here, right? So where I think I've explained all these things in my previous video, so no need to repeat them again. But yes, this is a very nice place where you can understand. Let's say I take uh, uh, a one-time amount and I am investing 5,000 bucks. So after 1 year, I'll be getting 8387. But since I'm not going to invest it for 1 year, it's a ELSS fund. So I'll be investing for minimum 3 years. So at the end of 3 years, I'll be getting 9243. So with 22.7% per annum, that is the return that has happened since past 3 years. But it's not necessary that it will stay the same. It might be better. It might also come down. So these were my few quick tips on what is ELSS and how you can invest it to save some amount of your taxes, which is very important because since you are making money and government has given us the option to save taxes, it's always good that we utilize it. So thank you for watching this channel, and please subscribe to it, because it helps us in creating beautiful content for you. So in next videos we will be also coming up with many other investment types and helping you out in how you can save your taxes, at the same time how you can increase your returns as well. So stay tuned to the channel. Thank you for watching. Have a good day. Bye bye.